All right, cool. So I'll start doing more videos like this. I know there's a ton of people that want to learn this. Took me like almost 2 years to get this down, but here we go. We want to jump on your web browser, pull up TradingView, and this is where you get access to all of the charts, all of the market activity in any market, you know, whether it's foreign markets, futures markets, forex markets, any chart in the world, you can pull it up on this website. So here you see market summaries, indices. This is what I like to focus on if I'm not trading indices like Dow Jones, the top 30 stocks in America, or Nasdaq, the top 100 stocks in America, and then the S&P 500, which is the top 500 stocks in America. If I'm not trading those three right there, then I'm over here and I'm in the forex genre or forex category, and I trade the Great Britain pound or the euro. All right, so for this for this breakdown, I'm going over the Great Britain pound trade that I caught, and just keep in mind, all right, everything pieces together in one big puzzle, right? So the first step is understanding the basics and the literacy behind actual market activity. So you see things like the war that's going on in Israel, right? Things like that are going to have a negative effect on the market, okay? And when you look at the Great Britain pound, it's been on a slow decline. There's a lot of other fundamental things that go into the actual price, right? But when I click on this and I pull this up, I'm going to jump into the Friday activity, okay? And how I was able to capitalize on such a simple forecast, a simple projection, all right? Ended up being one of the biggest trades of the week for me. Bit of the foundation, which is what I teach at my rock group. All right, cool. So 9:30 is here. Let's zoom in a bit. Cool. And it's crazy how fast you can get in these trades and get out. All right, so 9:30 opens. What I want to do is I'll give it 10 minutes from 9:30 to about 9:40 to show what's called structure. It's going to show a range. All right, and you can see that range right here. It's clear. So we're going to put another line right here to show 10 minutes after the banks have opened. Give the bank some time to get settled in, right? All right, so 9:40. So here at 9:40, I'm marking off every single every single structure point that has been created in the past 10 minutes. And then psychologically, when I look at this chart, right, I understand that uh, leading into this point where we are, the market has been pushing up, straight up, right? You can see it very clear. The market is going up. And when you're learning about how the market works, you understand that it doesn't just go straight up and it doesn't just go straight down. Typically, what it does is it moves up to reach a certain price point to fill certain bank orders because the banks are controlling majority of the orders. So the market will gravitate towards those bank orders. So for example, let's say there's a ton of orders sitting right here. Ton of orders sitting here at 1.2464, right? There's a ton of orders sitting here. This is just a visual. So this is how you want to picture the market. So if you wake up at 9:30 and you see the market has been pushing upward for the past, let's say 7 a.m. to 9 a.m. So the past 2 hours, the market has been climbing up. You can understand mentally that okay, the market must be climbing to reach a certain price to to gather some orders, right? It gathers these orders, and once it hits a certain price, you'll start to see how price starts to slow down, and it starts to reposition itself to go the opposite direction. So the only reason the price was moving up for the past 2 hours was to get to a certain price. All right. And right now the price is sitting at 12464. So in my brain, I'm picturing, okay, there's a ton of orders sitting right here. A ton of bank orders sitting right here. Once these orders get filled, as the market opens, right, as the banks open up and the banks start to get in their trading positions, you'll start to see how the market transitions. All right, so there's a bunch of orders sitting here. All right, and then from here on out, that's all I'm monitoring. I want to monitor price points where orders, I'm sorry, I want to monitor prices where the market reaches that price and then it starts to slow down. So here's another level right here, clear as day, right? You can see how price reached this level and decided to slow down. And then, like I said, mentally, you just want to understand the only reason it's slowing down is because the orders that it was climbing towards have been filled and the trading has begun for the banks. So, all right, I see these orders sitting here, and then I also see these orders sitting here. That's all you want to do. You want to make sure that anytime price pushed up and decided not to go up anymore, that's where your eyes want to go. So you want to make sure you draw that up. All right, so cool. Market has opened up at 9:30. I gave it 10 minutes to show which prices could possibly send price back the other way. Okay, and now we're sitting inside of our opportunity zone. I want to take a trade between 9:30 and about 9:30, 10:30, 11:30, 12:30. Between 9:30 and 12:30, I want to have my trade. Otherwise, you'll miss that opportunity. Okay, so we'll play this out. We see how price continues to respect this level. All right, we tap back into it. All right, so you see how we continue. Look at how many times we tap this price and we don't want to go beyond it. That's a red flag for me. All right, so here, once we were able to reject this price, come back. Okay, come back here, sweep these lows. We came back and swept these lows. That right there is letting me know, okay, we are getting ready to go to the downside. There's no question about it. So let me get ready to find an entry. All right. And there's a guy on YouTube. He goes by ICT. If you want to learn the fundamentals, the technicals, and how the market actually works, look this guy up or just message me. I'll send you the links of the videos that I studied from him. And this guy's he's a market master. Like this guy's made tons and tons of money just from studying how the market pretty much functions, right? So he has free YouTube videos on that, and that helped me learn a lot on how I can take advantage of it. Okay, so we see how the market respects these prices and then decides to head lower. Okay, once it starts coming lower, what I want to see is a aggressive push down below these current prices right here, sitting at this level, this green line. I want to see an aggressive push and hold below. All right, so we're watching. All right, there we go. A nice strong transition below this point is what I'm looking for, and that's perfect. So now we're watching, and I'll tell you when I get my entry comfort. There it is. Boom. So what ICT teaches is when the market is ready to make a transition, it'll respect certain prices, right? And then once it's ready to proceed, it'll leave what's called an imbalance. You see how majority of these candles here, they are connected. The one candle prints, the next candle touches it, the next candle. You see how these are pretty much connected? This is what is called an imbalance when the market expands aggressively without being connected to the previous candles. And here is what you call an opportunity. right? It's between my 9:30 and 12:30 window. So what I'm doing here is I'm getting my accounts open. I'm going into my trading account and I'm getting ready to put sales in. And I also have my trading group because a lot of people work. A lot of people work a job, so they can't sit in front of the computer from 9:30 to 12:30. So that's where my group comes in. I put what I'm looking at and I type it out step by step. Hey, I'm about to sell. If you want to take this trade or you want to see how it plays out, here's what you can look at. Cool. So we are getting ready for the sell. What we're going to do is wait for price to come back into here. All right. So price comes back into here, into this gap. I'll be selling it. So what we're going to do is this right here. We're going to wait. We're going to wait. The key in this situation is not to trade until price comes back into it. All right. Price comes back into it right here. So let me back this up. Back this up. All right. Price comes back into it. I'm patient enough. So once this imbalance gets filled, I just want to see price. There it is right there. I just want to see price turn around. As soon as it turns around, I'm taking out my trade. I'm covering these highs. All right. And I'm going and I'm targeting where price came from 2 hours ago. All right. So you can target something like here. All right. You could target something like this right here. Price came from here already, so you can expect price to come back to it. Target one. And then you can target something down in this area for an extended trade. But me personally, I like to get my money and get out. So when I see opportunities, I jump on them and I get out as soon as I reach a certain dollar amount. So I'm targeting $1,000 to $2,000 in a trade. So I'll get out whenever I see that. I'm working on holding my trades a little longer, but that's another challenge for another day. Right now is just getting in, getting out with a decent amount of profits. Okay, so target, boom. So that'll be target two. All right, cool. And then what you want to do is enter the trade. Make sure you cover the price point that was respected, which is up here. You can probably pull this up a little bit more. This is what you call a stop loss. It's protecting your trade. So if you're wrong and the market just continues to go up, you don't want to lose all your money, right? So what I'm doing is I'm putting $1,000 on this trade. If price comes back up past here, it's gonna take me out of the trade and I'll lose 1,000. But if price goes my way, I can make up to $2,000. All right. So now you just put the order in here. The order is placed at 10:30 in the morning. All right, and you let it play out, and then boom. So you can see here. Excuse me. You can see right here the trade took from 10:30 to 11. That's 30 minutes, and you're able to make from $1,000, which is this is where I closed my trade at. And then if you hold the trade a little longer, you make $2,000. All right, and like I said before, it's truly that simple.